My name is Akil Stokes. I'm a Forex trader, trading coach, and co-founder over at tier1trading.com. And I want to pop by for a second and just give you guys a random midweek video. If you can't tell, I'm in a very good mood. It's been a very good week of trading, but even more so, I'm just excited to be back. Last week we had our big trade to measure event, which I loved, but it was very draining, and it really got me away from what I like to do the most, which is trade. So being back in the live room this week, being back in the trenches with our traders where we're battling and discussing ideas each and every day it's really refreshing, and a big thank you for everyone that joins me in there. I know I'm the coach, I'm the one that you guys should be thanking, but I'll tell you what, surrounding yourself with positive, successful individuals in all aspects of life, not just trading, but many of you guys are very successful outside of trading. It just keeps me encouraged, it keeps me motivated each and every day, and when I'm happy, I do more things like this. So what I want to show you today is a trading opportunity that we looked at earlier in the week. It's a breakout trade, so a little bit different than what you guys usually see here on the YouTube channel. Typically breakouts are usually a little bit more advanced because they at least I think they take more experience to master. But check out the video, let me know what you think. It's a breakout trade looking at a few ways to take advantage of it, a few ways to analyze it, and I hope you guys enjoy. 4-hour chart, potential bearish bat at 131.56. But the trade that I wanted to concentrate on today is going to be on the Euro New Zealand. So kind of an oddball pair, but it's an opportunity that we don't get to talk about a lot. So for you guys that are breakout traders or maybe even daily traders, this is going to be pretty cool. And what I want to do is I want to start off by taking a look at price action, right? And there's two things price action is doing. Obviously, we've been in a bearish move since the start of October, and we've come down to settle at previous structure support looking left. Now, so far we've held this level, right? We've probed it, we've tested it 3 times, including today, but we haven't been able to close below it. And it's very similar to what's happening, what I showed you guys on dollar yen, where we're coming down and we're putting in this tight level of consolidation right near the lows, right? One would think, especially after 3 days of trading or 2.5 days of trading, if there was a good amount of buying pressure, buying interest at this level, we would have seen some type of move, right? You know, when you see a double bottom, you at least see kind of a retracement back before the second test. We've seen none of that. We've seen the market fight it off enough to stop it from going lower, and that could be sellers from up here taking profits as well. But we haven't really seen any type of pull in the opposite direction. And typically when you see that, I tend to think that we're going to see a breakout, a continued move to the downside. I call it kind of a pregnant pause, like a high and tight flag, where, you know, really, here's a good example right here, where price comes up, kind of goes sideways for a little bit, and then it just continues on its way. So that's one thing right there, right? The second thing is we also have what's called an inside bar, right? And this is cool because if you guys were with me for a while, right, and I feel bad about this, but it wasn't my fault, I promise. Earlier this summer, right, I always talk about this inside bar trading strategy. And earlier this summer, after talking about it for probably about 2 years, I finally got back into testing it, right? It was something that you can execute on a daily chart, look at it 1 time per day, get a signal and whatnot. The problem was, as soon as I started testing it, I put in a good week of testing, that's when I had the internet problems and they had to drill under my house and fix the dead wires and whatnot. And by the time that got solved, well, it was my busy time again. So I never had a chance to follow through. But this is a perfect example of using that indicator. So if I bring it on here, you're going to see the notation narrow range, or NRI. That stands for narrow range inside bar. And what that means is this. An inside bar is a bar that completes 100% inside the previous bar's range. So if I put a line here to represent the previous bar's top and the previous bar's bottom, right, you can see that the entire bar of yesterday, right, was trading within that range. And typically what you would look at in an inside bar is a breakout. And when you go into lower time frame, an inside bar is nothing but consolidation, right? If you imagine the first bar being like this, the second bar being like that, right? This basically just shows you consolidation if you were to look at it on a lower time frame. But what we'll be looking for is a breakout. Now, typically with an inside bar, if you want to do like a bracketing strategy, you would put a buy stop up here, a sell stop down there, and whichever way price breaks out, you get involved in. However, if you want to use an inside bar and, narrow range, that's the NR part, that also means that this bar has the smallest range of the past 7 bars. So if you count back 7 bars, this actually has the smallest range. So really putting an emphasis on that coiling effect, right? Think of the market like a spring, right? It spring, you squeeze it, squeeze it, squeeze it, you let go, boom, it pops out in one direction or the other. So typically in a situation, you can bracket the market and decide to buy whichever way the breakout happens. If you want to take it to a next level, you can combine it with your normal analysis and use it with what we just talked about with the tight consolidation near previous structure and only look for a breakout in a specific direction. And with that in mind, as you go down to the 240, right, you can see that we've actually put in a pennant pattern here, right? We have our impulsive move, get rid of these VS1s, they're all over the place. We have our impulsive move down, our swing high to swing low, and then we have our consolidation in our tightening range, right? You can see the range starts out big, gets smaller, 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 until we eventually break out one way or the other. And again, the way that you'd be looking for, at least the one that's going to offer the most opportunity, in my opinion, is going to be a break to the downside. So breakout traders, this is one that you want to put on your radar for a potential breakout. Now the question is, if we're going to break out, then where are we likely to go to? And we can do a few things here. Right? We can take, say, some Fibonacci retracements from swing high to swing low. Put it on there. We're going to have a 127. Let's just put some lines down there. I'm a visual person. A 127 there, a 1618 down there. What can we do next, guys? Yep. We can look for a 1-to-1 measured move. So we can take the equal move of the swing high, swing low, copy and paste it, and do something like that. You can see that's going to give us some confluence, right, with that 1618 Fibonacci extension. You can do a range breakout as well, meaning you take the entire range of the pattern formation like that, and you predict a breakout of the equal range. That's going to put you in that same level, really around this 69 level, 68.50s. Now, what's most important to me, right, I love doing the 1-to-1 measure moves, the fibs, all that stuff. What's most important to me is looking on the higher time frame and looking at structure and asking myself the question, where is price action likely to go next? When I look at my structure levels, there's a few levels that stand out to me. One is going to be this first line right up here. And it's hard to see, but this was a previous level of structure support. We had a little bit of a hold and a battle right here on both sides of the market. And then we found a little bit of support right here as well. So right around that 169.70 level, 170 even, is going to be a good place for first targets. That's right around the 127 extension. And the secondary level is going to be a little bit lower. Structure-wise would be right around here. You can see this is kind of the shelf. Once price action started trading below it, we came here, we consolidated at this level, found resistance, broke back down to give us a double bottom, or not technically a double bottom, but a retest of structure. It actually broke and closed below, but then we retraced back up and found a little bit of support here as well. So a little bit lower around that 168.40 level. And again, you have a 1618 Fibonacci extension and all that confluence level right above that at about 168.63. So I think 168.63 is going to be a good level for aggressive targets. If you want to be very conservative, 169.73 is going to be a good level as well. But a good example of a breakout trade you can set yourself up for. Again, this is on the daily, so you can look at it on the daily. If you want a deeper dive into it, you can go down to the 4-hour. But I would look for the breakout. And of course, if you're not as aggressive to trade the breakout, meaning the actual breakout, right? You can trade the break. You can wait for the breakout. Excuse me. Wait for the retest, and then try to get short that way, treating it like your traditional pullback trade. So good example of this. Again, we have more of a basic traditional advanced pattern formation on dollar Canada. It is election day. All right, guys, welcome back. It's Wednesday, a little bit before 1 p.m. So almost a day after I first brought to you this idea. And you can see it worked out pretty nicely. We did end up getting a breakout. We went past the 127 extension. We even went past that 169 even handle. I do think there is a little bit more room to the downside, but you can't complain with the move that we just got. And I'm glad I got a chance to share it with you guys. Now, if you like what you saw and you're interested in more, I would recommend taking our 14-day trial on the Tier 1 website. I'll put a link right below this video. But it gives you 14 days, not only in the London live room with Jason Greystone, not only in the New York live room with myself. By the way, the New York live room sessions are recorded, so if you can't make it live, you can always go back and review them in their entirety later. But you also get daily videos like the one I just showed you. The clip before was from our daily Trading Edge videos, where we come in and we try to walk you through some of the best trading ideas that are on our radar for the day to come. Now, before you ask, no, it's not a signal service. I am highly against signal services. It's not a problem if you want to use one, but I'm highly against trying to use what I do as a signal service. But it is a chance to become educated. It is a chance to take what we're teaching you in the course and really practically apply that to the live markets. So don't think too hard about it. Sign up right now. Take advantage of your 14 days. It will be well worth your $1. And there's no commitment. There's no auto bill. There's nothing like that. After 14 days, poof, it simply goes away. All right, so I hope you guys enjoyed that video. If so, please do me 4 things. 3, 4 things, right? Like this video. It takes less than a second just to click that little like button at the bottom right of your screen, right? Leave me a comment below letting me know what you thought. Subscribe if you are brand new. And 1, 2, 3. Oh, share it. Take a second, blast it all over social media, and make sure you tag me in it as well. That way I can give you your credit. Now, for you guys that are really Tier 1 and Akil Stokes enthusiasts, tomorrow's Trading Coach podcast episode is going to directly follow up on today's video. So if you didn't notice, in today's video, we talked a little bit about, I had a feeling that this was going to happen, right? That's a little bit of something called trader intuition. And this actually goes hand in hand with a comment I just received on the interwebs earlier today. So whenever we get a topic that kind of seems to hit differently throughout the day, I think it's a topic worth sharing with you guys as a whole. So that's going to be tomorrow's episode of the Trading Coach podcast, episode 103 if you're late. So make sure you check that out as well. All right. Until next time, gang, plan your trade, trade your plan. You have a great weekend. I'll see you again with another video this Saturday or Sunday. And good luck for the rest of the week in the market.